Welcome back. Will home prices decrease or increase over the next 12 months? I'll answer that question based on Corelogic's latest real estate market predictions through April of 2024. I'll also provide the top 5 markets in which they believe home prices will decrease the most over the next 12 months as well. I have a lot to share in today's video. Let's go ahead and dive right in. Before I share their latest housing market forecast, I want to share their forecast from 1 year ago to see how close they were 12 months ago. So their forecast 1 year ago, posted on June 6 last year, was an increase of 4.6% from April 2023 through April 2024. Now here's the latest market predictions, which is right here. The actual number that came in at was a gain of 5.3%. So very, very close to the forecast at 4.6% that was posted 1 year ago. Now it's at 5.3%. Also, home prices grew by 1.1% in April this year compared to the previous month. All right, now having said that, let's share their latest predictions as well. This is, by the way, based on their HPI, which is their home price index. So they're calling for an increase of 3.4% on a year-over-year basis through April of 2025. So they're calling for home prices to still increase, but increasing at a slower pace. Again, prices have increased by 5.3% compared to 1 year ago, but the forecast is only a gain of 3.4%. Please leave me a comment below with your thoughts regarding that. Do you guys believe home prices will increase or decrease through next year? Corelogic also noted this as well. Annual U.S. home price appreciation remained above 5% in April, with 3 states posting double-digit gains. I'll share those cities and states here in a little bit. By next spring, though, spring of 2025, national price gains are projected to slow down to a gain of 3.4%. with only a few states putting up increases higher than 6%. So over the past 1 year, we've been seeing 3 states that posted double-digit gains, whereas over the next 12 months, though, they're predicting only a handful of states above 6%. This slow cooling reflects not only the increasing number of houses on the market in some parts of the country, but frankly on a national level as well, but also elevated 30-year fixed rate mortgage rates, which remain above 7%, which of course is a major impact regarding our housing affordability challenges nationwide. Let's first talk about inventory numbers. This is a chart I shared in my video posted, 2 days ago, looking at active listing inventory through 2017. This is from Realtor.com. So for May, on a national level, we have 35.2% more houses for sale compared to May of 2023. As you guys can see here, higher than last year, than 2022 and 2021. So for the month of May, we're at least a 3-year high right now. Having said that, we're below 2020 as well as pre-pandemic levels as well. A few more charts I want to share with you guys. Here's a new one from Resi Club, which is resiclubanalytics.com, a fantastic website. If you guys are interested in learning about, national housing trends, they do an excellent job of putting together some charts and also this map right here. So here's the year-over-year change of inventory levels. I believe they're using data from Realtor.com. This is May last year through May this year. So it's pretty interesting to see here that we're seeing giant increases in Washington, up by 52.3% compared to 12 months ago. Arizona, I should do an Arizona market update because Phoenix is seeing a huge increase of inventory. And also for the state as a whole, a giant increase of 68%. Also, the biggest increases, though, is actually in Florida, a gain of 70%. Big increases in Georgia at 49%. Also, South Carolina at 46.8%. And Texas actually lagging behind now, Florida up by 42%. In contrast, there's only a couple states in which inventory is decreasing. That's Nevada down by 25% and South Dakota decreasing by nearly 10%. Let's also take a look at the inventory levels compared to May of 2019, which is really different compared to 3 months ago. Every single state was down compared to pre-COVID levels. But now we have Texas up by 1.6%. So they have approximately 2% more existing houses for sale this May compared to May of 2019. Other states are getting very close as well is Florida down by 5%, Arizona down by 2%, Idaho down by 1%, and also we're seeing Washington only down by 8%. Whereas much of the Northeast and the Midwest are still down greatly compared to May of 2019. Look at Maine, down by 60%, Pennsylvania down by 54%, Illinois down by 69%, Wisconsin down by 53%. Vastly different looking at each of these markets. We're seeing a flood of inventory in Texas and Florida. And of course, a big increase in the number of new houses being built there, which of course is also impacting those housing markets as well. One more source I want to share with you guys, because of course I like to share multiple websites with you guys. Here is altosresearch.com, another fantastic website regarding housing trends. So for the week ended May 31st this year, there's about 605,000 houses for sale. Again, only existing houses, excluding brand new houses. This is a 3-year high as well, higher than last year this time, only 437,000, higher than 2022, 21, but still lagging behind 2020 and 2019. In regards to mortgage rates hovering around 7%, that is absolutely true. As of today, which is on June 5th, the average 30-year fix, again, for people with fantastic credit with a 780 credit score, putting 25% down on average on a national level, according to the Mortgage News Daily, we're at 7.03%. Jumbo is at 7.3%. VA and FHA loans is around 6.55%. 1 year ago this time, we were at 6.89%. So only a small increase of 14 basis points from 12 months ago regarding average 30-year fix. Also looking at this chart here, rates have been coming down so far this month, coming down from the 7.3% rate we saw about 1 week ago. Now we're down to just over 7%. But overall this year, we have been seeing an overall increase of rates because to start the year, we were only at 6.72%. Going back to Corelogic's report, let's have a look at what their chief economist had to say. She stated the following: home price growth continues to slow as a comparison with a strong 2023 spring is still impacting year-over-year differences. Nevertheless, though, the April uptick in rates to this year's high has cooled some of the typical spring home buying demand. Because she's absolutely right, because we saw a spike in rates right around the time when we tend to see a peak in home buying demand. That really took the wind out of the sails of our spring home buying season. The home price slowing also highlights buyers' increased sensitivity to rising interest rates. I've been talking about that for quite some time as well. It appears that when rates fluctuate to over 7%, it appears that home buying demand decreases. So it says, as well as the anticipation that the presumed lower rates down the road will help ease the affordability crunch. So you're basically saying here that a lot of people may be waiting for rates to decrease in order to buy houses. And I kind of worry about people doing this, honestly, because if rates were to decrease, again, if rates were to decrease to 7% down to 5%, what do you guys think is going to happen? I mean, home buying demand is going to increase greatly because you can afford more. And of course, your housing payment would be less buying a house today compared to, 12 months from now when rates are lower, right? So my worry is that there's going to be people waiting for rates to decrease. That's only going to increase home buying demand, which is going to cause home prices to increase further, right? That's why I always tell people, buy what's right for you. Don't try to time the market. In any case, she goes on to say the following: the price cooling is more pronounced in markets where there has been an influx of inventory and or new home construction, as well as those where additional homeownership costs, such as insurance, taxes, and HOA fees, have risen relatively faster. We've been seeing that in Florida, right? Especially for Florida condos. I mean, what a disaster that is. HOA fees, maintenance fees, property taxes, insurance absolutely skyrocketing. And of course, new listings and inventory also skyrocketing as well. Okay, moving on here. Let's go over what happened this April compared to April last year and how each of the states fared. Because this is a big difference compared to the report from 1 year ago, which let me just share that with you guys right here. So 1 year ago, this is April 2022 compared to April 2023. Arizona, California, Colorado, Idaho, Montana, Nevada, New York, Oregon, Utah, and Washington State saw annual decreases in home prices. Now, there's not a single state that posted a decrease on a year-over-year basis. Quite a big difference here. And by the way, here's our map. The areas shaded in blue are areas in which their HPI, or their home price index, was less than 1%. So it could be a gain of 0 to less than 1%, or a decrease compared to 1 year ago. And basically just kind of splitting the US in half, much of the US was experiencing decreases in prices, whereas the southern metros were experiencing gains, especially in Indiana, a gain of over 7%. Now look at the map this year though, it's in red, which actually is a good sign because, or not a good sign, this means that home prices are increasing from 1 year ago. So there's not a single state that is down again. And also the biggest increases are not in the South now, they're actually located in the Midwest as well as the Northeast. And in fact, here are the top 10 markets that have experienced the biggest increases year over year. New Hampshire leading the nation up by 12%. Then we have New Jersey, South Dakota, Connecticut, Rhode Island, Illinois, Wisconsin, Massachusetts, Virginia, and Maine. Before I share the top 5 markets in which they believe home prices will decrease the most over the next 12 months, let's have a look at this map looking at the top 10 metros, how they fared compared to 1 year ago. In fact, San Diego actually knocked off Miami. Miami was in the top spot for, 2 years, something like that. So San Diego is up by 9.9%, which is eye-opening given the fact that the average home price there around $1 million. We're not talking about $300,000 properties in San Diego. So a 10% increase of $1 million is a giant increase of $100,000. After that though was Miami, an increase of 9.7%. Houston barely squeaked out a gain, up by 1.5%. They have a lot of building going on in Houston, which is likely impacting the softness in home price growth there. Same for Denver, up by 2.2%. LA, Vegas, and Phoenix all up by over 5%. Chicago also had a big increase as well, up by 8%. 1 year ago, vastly different. Miami up by 13.2%, San Diego down by 2.7%. What a difference a 1 year makes, right? They're basically even right now. But 1 year ago, San Diego and much of the Western markets were experiencing decreases in prices on a year-over-year basis. In fact, the biggest decline was actually in Las Vegas, down by 4.1%. Now it's actually up by 7.6%. All right, here's the markets in which Corelogic believes home prices will decrease the most through April 2025. So they have number 1 spot here is Palm Bay, Melbourne, Florida area, a very high probability. In fact, every single one of these metros is a very high probability. Number 2 spot is the greater Atlanta, Georgia area. Then we have Spokane, Washington, Daytona Beach, Florida, and also the Naples, Florida region as well. Just for fun, since it's in the number 1 spot, let's have a look at Palm Bay area. It doesn't include Melbourne and this area. Let's just have a look at Palm Bay in general on Redfin's data center. So right now, at least for the 4 weeks ended June 2nd this year, new listings increasing by 15.7% from last year's levels, still lagging behind 2022, but higher than last year and 2021. So new listings up by nearly 16%. Let's take a look at pendings. So pendings decreasing by 4%. So they have more houses being listed for sale, yet contracts being signed actually decrease. In fact, falling to the lowest levels during the same time frame in at least the past 3 years. That is a recipe for a softening housing market. If new listings or new supply hitting the market is rising, but contracts being signed, pendings is going down, that is a sign, a softness of the housing market. Let's look at the houses that actually sold. Yeah, that's also down by 3.5%. Let's look at active listings. So active listings is right here. Yeah, look at that, up by 26%, at least a 3-year high by far right now. So, I mean, wow, that's crazy. So 4,000 let's just call it 700 houses for sale. At this time last year, there was only 3,700. At that time, that was an increase of 15% year over year. So a big increase of housing supply. Let's take a look at price drops. Price drops easily a 3-year high as well. The share price drops at 7.3%. Last year, it was at 4.7%. Lastly, let's have a look at the average sale price to final list price ratio. That is flat compared to the same time frame in 2023 at more or less 98%, which means out of all the houses that sold over the previous 4 weeks, they sold for 2 percentage points less than the seller's asking price. This is well below 2021 and 2022. Back then, houses on average were selling for 1% over asking. Now they're selling for 2 percentage points less than. So it definitely appears based on the data we have today, according to Revest Data Center, that there's a bumpy road ahead for the Palm Bay, Florida metro area based on an increase of active listings, also an increase of new listings, yet contracts being signed, and also houses that are selling for at least lower than the previous 3 years during the same time frame. But please leave me a comment below your thoughts regarding today's video. If you guys want a real estate agent referral, please email me at jason@meetjasonwalter.com, or you can go to my website, which is realestateteamfinder.com. All linked below. I'll also provide a link to all the sources I went over in today's video, just like I do for all my videos. So hope you guys got a lot of value. Hope you guys got a lot of value out of today's video. And of course, if you did, please hit the like button. I greatly appreciate that. Of course, I appreciate you. Hope you guys have an awesome day and look forward to seeing you on the next video.